Rolling with that example though, let's say that the future production of whatever Bitcoin is remaining becomes so cheap, like a few cents to produce a Bitcoin in the future. We still have a finite supply and we still have a high demand. So if the supply remains constant and the demand remains constant, or the supply is slightly increasing but the demand continues to increase, even though the cost of production for future Bitcoins goes down, the cost of production for previous Bitcoins and the supply and demand curve that have been established in the past, wouldn't that mean that that price would remain constant at a minimum?
Yeah, it would in some way, because now you got to think of it two ways. Think of the supply demand price equilibrium, but then also think about the currency side, right? So every transaction has two sides to the transaction. You have the currency side of the transaction, then you have the goods and the services side of the transaction. When it comes to the goods and services side of the transaction, it's more based on the supply demand equilibrium, right? It's all the supply demand economics creating either a positive or negative price pressure. Then on the other side of the equation, for instance, with USD, when USD is being inflated and it's losing purchasing power, even if the supply demand on that good or service remains constant, the devaluation of the dollar on the other side of that transaction is actually going to force the price up. So when you have a base layer of demand on Bitcoin and you're trying to find a price, what would happen is if the cost of production went so low and because the demand was forcing a premium to the natural asset value, producers would come and increase hash rate. So it's a self-balancing mechanism, a lot like if the price of gold just went to $10,000. Well, if the price of gold went to $10,000 overnight and it only cost $1,800 to produce an ounce of gold, tomorrow there's going to be thousands and thousands and thousands of producers rushing to get involved in the gold mining business because the profit margin is just so high. And eventually they will pull out that gold. Yeah, we only, like you said, the finite amount is not true. That's intellectually dishonest because we know there's more gold out there and we don't know how much. And then in the far distant future, we don't know how much we're going to find. So if the profitability went that high, they'd find more gold and the supply would increase, but not in Bitcoin. Bitcoin supply can't increase. So if the profits become that high, what happens is the hash rate is going to get pushed up significantly because producers, the way Satoshi said it is, as the price goes to a premium to the cost of generate, he said cost of generation. I switched it to cost of production just to kind of easier understand it. But that cost of production is going to get pushed towards the price. So if demand is pushing a premium on the cost of production, well, then eventually all of that additional hash rate is going to increase the difficulty until we get to the point where the cost of generating is at the price. And then that's when you have ultimate stability. So, and it's a self-balancing mechanism. So yeah, eventually Bitcoin will be stable. But if there is any discrepancy between the cost of production and the free market price, that discrepancy will be solved with either a positive or negative difficulty adjustment based on the incentives of those who are producing Bitcoin.